All right, if you're a crypto investor, you're going to want to listen up. There is a massive tax change coming in 2025, and it's going to completely reshape how your trades get reported to the IRS. Seriously, being unprepared for this could cost you a ton. So let's break down exactly what's about to happen. You know, it's the question on every crypto investor's mind, right? Are my transactions really flying under the radar? Does the government actually have a window into what I'm doing on these exchanges? Well, the answer is about to become a very loud, very clear, and very automated yes. There's no gray area left here. A new system is about to kick in that puts your crypto activity directly in the IRS's line of sight. We are walking into a brand new era for crypto taxes. For years, let's be honest, a lot of people operated in a kind of murky area. Well, those days are officially coming to an end. The game is changing, big time. So let me introduce you to the new player on the field, Form 1099-DA. The easiest way to think about it is like the 1099 you get for stock trades, but it's built specifically for digital assets. Starting in 2025, exchanges like Coinbase, Kraken, you name it, they're now required to send this form to you and a copy straight to the IRS. And it reports your gross proceeds, which is a fancy way of saying the total amount of money you got from selling crypto all year. And that term, gross proceeds, is the key to this whole thing. So what does this actually mean for you day to day? Well, for one, your broker is now snitching on you. Just kidding. But they are sending your sales data directly to the IRS. This is a first. They've never had this direct automated feed before. And here's the kicker. If the sales number you report on your tax return doesn't match what your broker sent them, bam, an automated system flags it and you're getting a letter. There's no human even looking at it at first. It's all machine driven. But this is where it gets really, really dangerous. And if you take one thing away from this, let it be this. The information the IRS is getting, well, it's not the full story, not even close. It's what I'm calling the basis problem. This slide lays it out perfectly. On the left, that's the IRS's world. They see the 1099-DA, and it says you had gross proceeds of $100,000. To them, that looks like income. But on the right, that's reality. You actually bought that Bitcoin for $90,000, so your real taxable profit is just $10 grand. The problem is the IRS has no idea about that $90,000 cost from this new form. And this is the absolute core of the issue. For the 2025 tax year, brokers are only required to report your gross proceeds, that big $100,000 number. They are not required to report your cost basis, the $90,000 you paid for it. This creates a massive, dangerous information gap that automatically defaults in favor of the IRS. Just let that number sink in. $90,000. On just one trade, the IRS's starting point, their default assumption, could be that you owe tax on an extra $90,000 of income you never actually made. Now imagine that across every single trade you made all year. Yikes. Okay, deep breaths. That's the problem, and yeah, it's a big one. But the good news is there is a totally clear way to handle this. So let's talk about the solution and how you can close that gap and keep yourself off the audit list. It's basically a three-step process. First, you get that 1099-DA from your broker. Second, and this is the part that takes work, you have to calculate your cost basis for every single sale. That means you got to dig through your records, find out what you originally paid for everything you sold. Then, finally, you report both numbers, the sales price and your cost basis, on a different form called Form 8949. That's what you file with your tax return to show what your real profit was. So the bottom line is this. The burden of proof is now 100% on you. The IRS's computer sees a $100 grand sale. It is your responsibility and your responsibility alone to file the correct paperwork that proves your taxable gain was only $10 grand. If you don't, guess what? You're getting taxed on the whole thing. Now, while this new reporting rule makes everything a lot stricter, it also shines this giant spotlight on one of the last major tax advantages that crypto has over stocks and bonds. And believe me, this advantage is extremely time-sensitive. Let's just compare the two real quick. With stocks, there's a thing called the wash sale rule. It stops you from selling a stock at a loss to get a tax break and then buying it right back the next day. You have to wait 30 days. But here's the magic part. Right now, today, that rule does not apply to crypto. You can sell an asset at a loss to slash your tax bill and buy it back 1 minute later. No problem. This opens the door to a super powerful strategy called tax loss harvesting. Let's go back to our example. Say you have that $10,000 gain from Bitcoin, but maybe you've got another coin that's down 10,000. You can sell that losing coin, take that $10,000 paper loss, and use it to completely wipe out your $10,000 gain. Then you can just buy the coin right back. Boom, your tax bill just went to zero without really changing your portfolio. But as you can probably guess, a loophole this good, this powerful, it doesn't go unnoticed forever. And that brings us to the final and maybe the most urgent point of all. This window of opportunity, it's closing fast. Make no mistake about it, the folks in Washington are fully aware that the wash sale rule doesn't cover crypto, and they are actively working to change that. It is not a question of if this loophole closes, it's a question of when. This timeline really puts it in perspective. Right now, the loophole is wide open. You can harvest all the losses you want. The absolute deadline to use this for the 2025 tax year is December 31st, 2025. After that, pretty much everyone expects Congress to slam this door shut for good, putting crypto on the exact same playing field as stocks. So the real question you have to ask yourself is this. The rules are changing right under our feet. The tax plan that works perfectly for 2025 will probably be totally obsolete by 2026. So, are you ready for the new world that's coming? And are you going to take advantage of the old world before it's gone for good?